In this episode, Celtic Capital President and CEO Mark Hafner explains how asset-based lending helps businesses return to bankability.
I thought we'd start with talking about why some small businesses can't get bank financing and have to seek asset-based lending. Most small businesses that can't obtain bank financing run into a couple of problems. Either their profit and loss, their P&L is not sufficient, meaning they're probably losing money, or they don't have enough capital in the business, and so their balance sheet ratios aren't sufficient to qualify for bank financing. So when you run into that as a business owner, you have to know what your alternatives are, and oftentimes banks will refer companies to asset-based lenders. Asset-based lenders look at things a little differently than banks. They are looking primarily at the value of the collateral and how it performs, and secondly, to the financial performance. We always take the approach of how much can we lend comfortably against the assets of the business? Does it meet the need of what the business is trying to accomplish? And does our loan structure provide the cash flow for the business to obtain their projections going forward? And if so, then it looks like a workable deal for Celtic Capital. One of the things that you'll gain with an asset-based lender if you're a small business owner is forced discipline. So an asset-based lending structure is only going to lend you a certain amount against the various asset classes, be it accounts receivable, inventory, or equipment, so as not to get the business in trouble by borrowing more. If the business owner learns the asset-based lender's process and how they view that and continue that on once they leave asset-based lending and go back to bank financing, it will really help their performance going forward. The other thing that's important when you're leaving an asset-based lender and going back to bank financing is the condition of your financials. So a lot of small businesses have inadequate accounting personnel. They don't have timely financial statements. And so when they go to seek borrowing relationship from a bank, they can't get it because they don't have the right reports to provide to the bank. So it's very important to keep on top of your accounting, keep timely financial reporting, and also to meet periodically with banks that you think might be a future home for you. Don't just wait until you're ready to move. Try to develop those relationships and show them your results, show them what you're trying to do, get them to understand your business so it's an easier transition when you're ready to move. So those are some of the things to keep in mind when you're looking at how to get out of asset-based lending and go back to bank financing. Focus on the disciplines you learned with asset-based lending, the financial reporting, and developing that rapport with the potential bankers.
Thank you for listening today. If you'd like to talk to Mark Hafner about your specific business financing issue or about making referrals to Celtic Capital, sign up for a quick one-on-one chat with him at www.celticcapital.com. And if you haven't already done so, subscribe to our podcast channel to hear more business financing insights from Celtic Capital.